All right, we are going to go ahead and get started for this evening. I'm going to start off on YouTube for a little bit, about to go ahead and teach a class. I just want to run through and go through a couple important points and pieces, man. I think it's so important that people take time to learn the fundamentals first. You see, a lot of times people get caught up and they don't know the fundamentals of technicals. They don't understand the fundamentals of being able to read and analyze really business just in general. And I think a lot of times people get caught up. You don't pay attention to gross margins. You're not paying attention to return on equity. You're not paying attention to cash in the hand, cash on hand for a business compared to debt. Like there's a lot of things that go into making investment decisions. And I think too much in the investment community, there's preached to getting in shorter dated options and you don't even know how to read a chart. And there's so much financial pressures I feel like that people are facing. And so I want to take a second tonight to really break down how to actually analyze and set yourself up for success. So, I just wanted to make sure that I help you guys out. Um, and so we're going to go ahead and get this party started. So hopefully you guys listen to me tonight, take these notes, jot this information down. It is game time. So I'm going to go ahead and drop this link. My students are going to be coming in here any second. Shout out to all my people that's here on the YouTube real quick, just warming us up. I will cut the YouTube as well once we get class underway. But this is just me just stressing this message to people. Like your education is important. You see, a lot of people is putting off their education, and that's why you're not actually becoming profitable. All right. And it's so quick to, once again, everyone's chasing trades. And I see this. You think that trading, I had a debate with somebody today about trading every day. Like I've been there, done that, talking about they do all three. I've traded in different markets. I've day traded. I've swing traded. I do all three. Right. I don't day trade as much as I used to, but I still do day trade from time to time. Just because I don't talk about it all the time doesn't mean that it's not happening. But all these people saying they day trade in these high risk scalping. I want to see you do that over a decade. Do it for 10, 15 years. You know what I know you can do for 10, 15 years? I know you can long term invest for 10, 15 years. I know you can swing trade, but all that intraday trading and you thinking you're going to be able to be long term successful at that, and you think that you're just going to day trade for the rest of your life and that's the only thing that you need. I want to day trade. I want to leave my job to day trade. Keep your job. Your job is what's fun to you. Most of us, we have a cash flow problem. And we're going to talk about that tonight. A lot of us have a cash flow problem. And so, what do I mean by that? Where we're not bringing in enough cash to be able to actually go ahead and invest. That's one of the biggest challenges is getting your cash flow up, right? And so, cash flow is super important for an investor, right? Because you need cash flow to continue to invest. Cash flow is one of the more important components to be able to long term invest successfully. Because why? Every time that the market moves down, you're going to be saying, "Oh, I need to pull out. I need to pull out my long-term investments." Right? You need to sell. You strap for cash. So figuring out the cash flow is so important for me to stress to you guys. So if you've been following me and listening to me for some time, you guys know I always want to provide the best information possible. So I teach you things verbatim on how I'm going to do it. So I show you exactly how to eat. That's how I do it. I show you exactly how to eat over and over again. And so what I told you guys is once again, pay attention. Pay attention to the information. See, a lot of people is thinking that things is going to be handed to them. They're thinking that things is going to be easy. When it comes to trading and long-term investing, it takes time and patience to actually learn. Right. So just to stress that. I'm gonna start letting people in a second, but it's up to you. It's up for people, you know, it's up for people. Mm, 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 mm. So just really my thoughts. Like I said, so the Zoom, I seen someone, the Zoom code is in the same spot it's always is, guys. So it's in the same spot, right in the Discord. But get on class now. If you are on the YouTube, get on class. I will be cutting the YouTube here shortly. So there it is. So uh-uh. All right. We're gonna let everybody get on. We are live on Zoom. So hopefully people listen to me tonight. All right, all right. We are live on the YouTube. Putting on like it used to, man. All right. All right. I'm start letting my people in here in a second. Put the record on. Mhm. Yeah, we're gonna start letting people in a second here. So just like I said, I wanted to go through a couple things with you guys, make sure you guys were prepared and ready to go for what's next. And yeah, like I don't really do my job is to be here to help you effectively learn how to eat off of the financial markets. That's what I'm here to do. And to teach you how to do this in the long run. So sometimes we have to have those uncomfortable conversations. And these are the conversations that I want to have tonight. So this is going to be strictly from a learning perspective. I've been there, I made these mistakes, right? Where you're chasing these short-term pleasures, thinking that in the long run it's going to pay off, and then eh, it doesn't. Payoff is you. So take advantage. Got a good class set up for you guys here tonight. So take some time to really run through this information. So mm, 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 mm. We will let everybody in a second, guys. Mm, 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 mm. All right. All right. Go ahead and let my great people in here. Cut off this one. All right. Everybody should be able to hear me. You guys are being let in. So everybody should be here. What's going on? Hopefully everybody's feeling well. Gonna have a good conversation, you guys. I'm sure just seeing things come through the Discord. So we're about to have a good conversation here tonight. So let's talk about it. First thing I want to talk about is let's talk about cash flow first. So really, I want to talk about the foundation of long-term investing, right? I want to talk about cash flow. So first thing I want to talk about, the first real question is cash flow one of the most important components for long-term investors? Of course, day traders, swing traders, etc. Of course, as well too. But cash flow is the biggest thing, right? So for long-term investing to be able to be successful, you need to increase your cash flow, right? And so we all know here in the United States, some of the main problems that all of us feel, and no one's immune to feeling it, right? Is you go to your local grocery stores, you go to pay your bills, you go to do just about anything. And the cost of you go to take a flight, you go to do any service, you go out to eat, whatever it is, the cost is always increasing. And so one of the biggest things that I stress is cash flow is one of the most important things. We talk about companies all the time being positive cash flow, but the first thing that we have to really identify is within ourselves of asking us ourselves the main question is, are we positive on our cash flow right now? That's got to be the main question. We talk about these companies being net positive on cash flow or negative on cash flow. But the main question we should have for ourselves is, how can we put ourselves in a better position to have more cash on hand, right? Because we want companies that have cash on hand, right? Companies that have a little bit amount of debt, right? But the same thing needs to be held for, to ourselves. So the main question that we should have is, okay, cash flow. How do we increase our cash flow and how do we keep our debt lower? I find it once again that when I'm in these different spaces and I'm talking to a ton of people, so many people are blinded by the short-term success of the market, right? And people are not thinking as much about the long-term investing. This is something that I really speak about wholeheartedly because the opportunities that you're seeing happening right now, and it's been in a small scale, but they don't always appear like this, where you have great companies coming down to really fair prices, because usually the market is usually always in an overvalued perspective, right? We're always somewhat overvalued. So when the market does pull back and provide discounts, investors never hesitate, right? So why investors panic when the market is down? If the market drops 10, 20, 30%, guess what doesn't stop? Bills are still due. Income instability creates fear, right? Because think about it, the market's coming down 10, 20, 30%. These companies, they're thinking about what? As well, layoffs. So now that directly goes into income instability creates fear, right? Now fear leads to selling long-term assets. So when you're not raising cash when the market is up, when you're not increasing your cash flow, when the market's been up like it has, and these are the good conversations that I have with a lot of individuals in here, right? Is people have been stockpiling cash saying, you know what? Next time this thing pulls back, I'm going to have something on the side to be able to take advantage of it. So I want to commend a lot of people for that, right? And so why people are panicking is because now those assets they bought at the top, they're now seeing those assets fall very quickly. And so now that causes that panic. Once again, you still have one of the main things that we end up seeing, bills are still due. We see that. Income instability obviously creates fear. So you see that there. Income instability creates fear. And fear leads to what? Selling your long-term assets. Next, the real problem. It's not really a strategy failure. And it's also not really a lack of belief as well, too. It all comes back down to cash flow. The main issue, what's the real problem? Yeah, we taking the gloves off. What's the main problem? Is if this market comes down 10%, are you going to have the cash to be able to actually take advantage? That's the real problem. But I want to address these things up front. So as we see certain things come, we put ourselves in better positions. So you don't have to put nothing in the comments or nothing in the chat tonight. Sit back and really think about, okay, what can I do more of? Because honestly, even a cutback, right? Cut back. Yeah, you can cut back eating out, but at the end of the day, you need a place to lay your head. You need a car. There's certain things that you need necessarily. And even, a lot of, you take a look across the board, your necessities are even already have gotten out of control, right? From a price standpoint. So it's a cash flow thing. Cash flow equals staying power. When your income covers your expenses, right, you can hold through volatility. The worst thing is when your income is down and there's volatility in the market, because that's a psychological point that's going to really eat up in your mind. When not only things in your personal life, your income may be down, you may have gotten laid off, right? You may have gotten less hours, whatever it may, less overtime, right? Got a lot of people in here that's taking advantage of that overtime, stacking that cash, right? Making sure they're good when this market comes down. You're not going to be able to hold through the volatility. Well, you should hold through the volatility, but mentally you may not be able to, right? Because you're panicking over something else, right? So when your income covers your expenses, you avoid the panic selling. You also let compounding do the work. So Oracle, whether you get Oracle at $140 or if you get Oracle at $100, right? Whether you get it those two different places, if it's at 140 and you buy it now, and it goes down to 100 and you buy more and you bring the average cost down. But in order to buy at 100, you got to have more money. So this is why I say it's a cash flow thing, because you're also going to avoid panic selling because it's the same company. The price is different, but you've gotten a better buy. So you understand that and you want to buy the right things while this market is coming down. All right. What happens without great cash flow? You sell great assets at the bottom. You break up your long-term plan. So the plan that we've had from the beginning, we've been talking about this plan, taking advantage of the leverage products, taking advantage of these stocks that are hitting good discount areas. You destroyed the compound growth because now you sold an asset because once again, you bought it too high. You bought it during the peak when everybody's saying this market is going to do it, it's going to keep it. And then now it stalls out and trades sideways like it has for the past 6 months. And now you got certain sectors that's correcting, i.e., examples, right? Cybersecurity, cloud. You don't even need it. You guys have heard it for 6 months. Bitcoin, Ethereum gave you the opportunities. So now you think about it, you got to separate these things. You got your living money, your investing money, your emergency money, and your opportunity money. Right? Your living money is going to obviously your living expenses. The things, obviously, that's the most necessary thing right there, your living money, because that's what it costs to live for you to operate. That's your operating costs, right? You have your investing money that you put to the side. You also have your emergency money because you know a rainy day could happen at any time. And then you also have your opportunity money where you look at your opportunity money as, I wouldn't say your play money per se, but your opportunity money is maybe money that you put aside to be maybe a little bit more risky. You take a shot at some of the companies that, are sitting down there with that with a extremely high risk. And you're like, I'm gonna take a shot on one of these. And you do, right? So you have your living money, your investing money, your emergency money, because we all know like rainy days can happen. Boom, something happen, personal life. I mean, death in the family. It's a combination of things that's going to take place and happen, and you just you can't plan. The emergency hit you, it hit you. It's just the reality. That's the way life goes. But being more intentional, these are the conversations we got to have up front now. Phase one, stabilize, increase your income. Right now, part one of this is lowering unnecessary expenses. Notice I said this in the beginning, right? There's certain things that you just can't cut out. You can't cut out once again where you got to stay. You can't cut those things out, right? You can't cut out, right? A vehicle because you need a vehicle to get you from point A to point B. Some people had the ability to take public transportation, etc. But you figure things out. But there's food, right? Everybody's entitled to food. I don't believe no one should go hungry, right? We should be, food. So the thing is you got to figure out how to lower your expenses. And that's why I say the short-term pleasures, Sometimes it's you just got to cut back on it. It's like, nah, well, shoot, I wanted to go do this. But you know what? I can do this even better if I sacrifice a little now and I hop in ETH and I get ETH at 10, 15, and then ETH goes to 100 and now I done 10x my money. Now I can go and do what I really want to do and be feeling really great about it. Because you got some investments here that if you put 10, 15, 20,000 in, you can end up 5, 10x in that. You do that, shoot, you got more than enough to go say, hey, well, shoot, I'm about to go take a trip, or hey, I'm about to go do this nice for myself. So that's the mindset that we got to have. Also, got to have your emergency funds, right? Your emergency reserves, because anything can happen. Separate your accounts. Like, have your trading account, your emergency account, and your opportunity account. Separating those. Don't have your emergency money in your trading account. Oh, yeah, I'm talking that talk tonight. Don't have your emergency money in your trading account. There's a lot of people, and I won't say it's people that's in here, but there's a lot of people that's in this world right now that's putting their emergency money in their trading accounts. And they're praying, Lord, I need a miracle. Lord, I need a miracle. Listen, that's the wrong time to confuse God and trading. I'm going to tell you that. So making sure that you have those separate, have an opportunity account, got your trading account, you have your emergency account, and you have your opportunity account. Very, 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 very important. Separating those. Now invest with confidence. Now you can hold during corrections. You can buy dips strategically and think in years, not in days. Like that's an important piece for me to make. Notice I'm talking about 2028. I'm already forecasting what Bitcoin's going to do, what ETH is going to do, what Ethereum's when Ethereum turns this thing around, when Bitcoin turns around. I would hate to go to 2028 and Bitcoin be sitting at damn near $200,000. And then now at 60,000, I was too chicken to take my shot. I would hate for me to not get Coinbase in the lower 100s and then Coinbase is at $300-400 again. I would hate for CrowdStrike to go to 275 and then CrowdStrike's ass is at $700-800. I would hate for that. Like those are the things you hate. Just like 3-4 years ago, remember? No one was buying Nvidia's chips. Nvidia was dead. You could have got Nvidia at $100, and then Nvidia ended going to 2,000, and that's in a 4-year span, right? So really think about that. Nvidia did a 20x in a span of 4 years. This is why I keep saying think in years, not in days, because sometimes you can get caught up in the day to day of what happened today, what happened tomorrow, what happened the day after that. And then boom, you end up missing out on these massive rallies. I've seen a lot of people coming in talking about, man, I'm up on TSM nice since 2024. That's a great feeling. When you put your money and you poured your dollars in and you were strategic about it. But when you're chasing these trades, you miss those things. So psychological freedom, let's talk about it. Cash flow gives you emotional control. It also removes the survival-based decisions and allows for disciplined execution. I want to talk about this, right? Because this is something that I think a lot of times, once again, this is why I go back to the cash flow. Majority of us, it's a cash flow thing. We're thinking, okay, how can we increase our cash flow? Because now if we have a higher cash flow, that's going to remove our survival-based decisions, right? Of saying, well, damn, I only have this. So now I'm going to try to, here's how it goes. Well, I only have this amount. So L said to go 6 months on this contract, but I only went 2 weeks. Just using that as an example, right? Going 2 weeks, if I told you 6 months, is a survival based decision. It's damn, he did say six months, but I'm only gonna go out 2 weeks because I'm thinking from a survival perspective, like, damn, well, sure, he said 6 months, but I gotta do this. And now you made a survival based decision. Once again, cash flow, increasing your cash flow. I want to give a shout out to all the entrepreneurs as well that's in here. Shout out to you, a lot of you guys. When I speak to you guys, I love hearing the different businesses. I always ask the questions of like, "Hey, what business are you in?" Right? Particularly Cleve and Remar. Right? Shout out to them. You guys, like I talk to Cleve all the time, and Cleve's on jobs. He's working. He's building that cash flow. Cash flow is important. So just giving like those examples, right? So shout out to my entrepreneurs, who are in the building, right? We got a lot of entrepreneurs within the community. We have a few barbers. Shout out to all my barbers, keeping us nice and fresh. Shout out to our stylists as well, our hairstylists. We got a few of those here inside this community. It's a cash flow. You guys should be raising your prices. You guys obviously are very great at what you guys do. See a lot of you guys' work. So it's a cash flow thing, right? You can't compound if you're forced to quit. Survival first, then growth, then wealth. Like that's really the core principle. And that's why I say if you're not in the best position right now, it's okay. Come and get these core principles, what we're teaching you here. And so now you're in a better position, but don't make the survival based decisions. Oh man, I just gotta make this decision. I'm gonna put this in, and you got your emergency money in your brokerage account. You got your emergency money in your brokerage account. That's a mistake. So that's how I wanted to kick this thing off. Where is second? Drop this next one. Mm-mm-mm. All right. There we go. All right. So let's talk about this next thing. It should be right. So why you must become a long-term investor first before becoming a trader. So let's talk about it. This is going to help you one build capital the right way. Also understand the macro cycles. We teach you that directly here. We talk about the changes and the macroeconomic things first, right? How those things dictate and play a major role in the market. We also talk to you about earnings and how earnings play a role in the market. You got to master the fundamentals first. So you got to have your training wheels on. I'd be surprised at people that's trading that don't know when earnings is happening. Oh, I'm in a trade, but I ain't know earnings was coming. Or I'm in a trade and I ain't know FOMC was about to happen. Oh, I'm in a trade, but I ain't know CPI was about to come and happen. So there's a lot of things to learn. There's so much to learn in the beginning. So before you're putting a significant amount of money at risk, you got to understand those things first. The problem with here's going to be the problem with most traders jumping into trades without full thesis. I'm gonna tell you that right now. Chasing momentum without confirmation. Also, this is number two is one of the main issues. Consistently asking, are we still in? Are we still in? You should never take a trade and you don't have a target. You should never take a trade. It really amazes me how many people take trades. Oh, I just got into this trade, but I don't even know where it's going. I don't even have a target. You are setting yourself up for failure. Once again, you are setting yourself up for failure if you are taking trades, right? And you are not taking down targets. You should know the targets off the back of your hand when you putting your money on the line. You're playing around with this thing if you don't know, oh, I'm in Palantir, but I don't know that I should be watching for the 125 break. You should. I'm in Coinbase, but I ain't know that I should be watching for that 154 to 152 range for price to break under there. Just telling you, you should know these things off rip. Anytime you take a trade, these charts need to become memorized in your head. Not to say that you're not pulling them up, but you should know defined levels. I'm not looking at no charts right now, but I know that on Tesla, we need to get below 402. Underneath that, we need to get underneath 392 to take a move back to 383. No charts I'm looking at. But if I go pull that chart up right now, those are going to be the levels. That's what you need to be doing. On these charts so much, you can vividly see it in your mind. So you understand how price is going to move and react. All right. So let me go to number 4. I want you to understand more of these. Take this time this next quarter to understand the macroeconomics, interest rates, and how that impacts direct valuation, inflation, and how that affects margins and spending. Think about it, right? We've been dealing with an inflation problem. How is that directly led into these companies? If you listen to these earnings calls, earnings have continued to show you, right, that these companies, the expenses continue to go up. So expenses are going up and spending. Liquidity drives risk appetite. All right. Macro sets the environment really for every trade. So what's happening in the broader market is going to factor into your specific trade. Notice we've been targeting in the past couple of months the same sectors, and we've been cooking these things to the downside. So what's happening in the macro helps and points you to the direction where you need to pay attention to get the most yield. Next thing I want to talk about, fundamental analysis. Know what on your own. Know what you own, excuse me. So if you don't understand that there's some missing gaps on OKLO, and that's why I stress this is one of the things, and I'm sure you guys probably see, this is what ticks me off the most. And this is not a knock to anybody that's in here that did this. So don't take this as me knocking nobody. This is more so me knocking the people, for example, that just post tickers and don't teach you exactly what you're buying. Because as a new person, you take it at face value. Man, such and such said, I need to grab this ticker. So I'm going to just go ahead and grab it. But you don't know nothing about profitability. You don't know nothing about earnings growth. Like there's a lot of things that before you should think about putting money into a company. But everyone thinks, well, this is $20 or this is $15. Okay, it's cheap. So I'm gonna just grab 100 shares. That's not how you want to do this. You don't want to be spread so thin to where you're in 30 companies and you got $500 a piece in 30 companies. That's where a lot of people are making mistakes. You should be more centered and focused depending on your bag size. And I did an example on this last week. And I said, honestly, if you're investing less than 20,000, there's no way that you should be in anything more than maybe 5 tickers, really max. If you have 50 to 100K, you're looking at like 5 to 7, maybe max 10. Anything over 100K still to 100K to 250,000, you shouldn't be no more than 10 to 12, right? So you should really highlight, in my opinion, more so concentrated areas. You don't want to be over leveraging yourself being spread too thin, right? Without fundamentals, you're going to panic. Red days feel catastrophic. So if you don't understand that certain businesses are correcting the prices you actually should want to buy, every red day, I can tell, it's going to feel, oh, the market was, oh my God, it was so bad today. It was excruciating. I always say it's a 2% red day on the NASDAQ. That shows me who's serious about this thing. When the NASDAQ's down 2%, oh, I'm cooked. What you talking about? You cooked. That was an amazing opportunity because if the NASDAQ has fallen that much, NASDAQ gets down 10% from a high. Usually the VIX is above 20. And when the VIX is above 20 is one of the best times for you to actually go ahead and buy. So you're overreacting to the headlines. It feels catastrophic. Remember, Liberation Day and all of that stuff. But if you were a buyer of Liberation Day, made a lot of money. The QQQ was damn near at 400, was a little bit less than $400, right? The QQQ was moved incredibly to the downside. Major. You see where the Qs is at today? NASDAQ made pretty much went up 50% from the low at Liberation Day. You're overreacting to the headlines, but that's why we talked about the first thing, cash flow. Technical analysis also removes the emotion. Main questions that a beginner asks: what is this stock doing? Why did it go up? You obviously don't have a chart. You should always identify trend direction. Is the stock making lower lows and lower highs, or is it making higher highs and higher lows? That's simple. First thing you should do: mark support and resistance, wait on confirmation, and enter when it makes sense. Set targets before you enter. It's not as much, and that's why I said something. I said I'm not going to talk and try to give you sexy answers, right? Some people think there's some magic formula. I'm going to put a formula on the board and it's going to be magical and it's going to sound really good. Nah, it's nothing magic. And that's the thing that a lot of people get caught up in. They're looking for for me to give you like a hot take. For those people that watch those sports shows, that's what they want to do. They want to give a hot take. When you cut on ESPN in the morning after a big game, the pundits on television, they want to give you a hot take. Man, this player is going to do this. Man, this team is going to go all the way. That team, like that's a hot take. It sounds good. It sounds good, but it's not really that good. It's the basic and the fundamental things that is going to win you a championship. It's not much more to it. All of the sexy stuff, the hot, you want me to give you the hot tagline, it's just not going to happen here because that's not what's going to change the game. It's doing the little things right over time. Every trade must include an entry price, stop loss level, target 1, target 2, maybe a target 3, your risk percentage, and position sizing plan. So are you going to trade 1 contract, 2 contracts, 5 contracts, 10 contracts? You have to decide that for yourself based upon your account size and your risk tolerance. Why asking, are we still in, burns you. It shows lack of planning, shows you have no written targets, you have no defined exit strategy, you're very dependent instead of independent, and you're also making emotional decisions. Stop chasing trades. Late entries reduce reward to risk, right? So let's talk about it. CrowdStrike falls $80, but someone asked me, should we be buying CrowdStrike puts? Doesn't make sense. CrowdStrike just fell $80. What you think happens after that? Lower high before a lower low. Half-heard theses is going to lead to losses. So hearing something halfway and then doing it a quarter way is going to lose you money. Hear the entire position before entering. This is a question. What is the macro environment? What is the fundamental reasoning? What is the technical setup? Where is the invalidation? And where is the expiration plan if options? These are the 5 questions that you should be asking. What is the macro environment? What is the SPY and QQQ doing? What is the fundamental reason? Is there something happening within this company that could be driving it down and up? What is the technical setup? Let me go to the charts. Do I see a bear flag, a bull flag? Do I see a double top, a double bottom? Where would my position be invalidated at? Where would I look to get out? On the opposite side. And what's my expiration? Am I going till May, June, July, September? Am I going to January of 27? So forth. So step-by-step training framework. And these are all the things that we do. Step one, master macro cycles. Step two, learn fundamental analysis. Step three, build your long-term positions. Step four, study technical structure. Five, practice risk management. Six is just execute all of that with discipline. That's exactly what we're teaching. All right. And so some of these kind of walk you through some of the things that we've discussed and spoken on here today. So I'm gonna leave you guys with this tonight, some food for thought to definitely make sure, um, that I help you guys out in the long run. Like I said, I'm very committed to wanting to help people be successful year over year. This is not something that I just think, okay, it's going to be a 3 month, 6 months. Now, this is a year over year thing. So nonstop value is what you guys always get from me. Take this obviously very serious. Um, this is obviously you guys' hard-earned money on the line. Let's do right with it. Let's make it make sense in the long run. And so this kind of is a really good, just a refresher, a recharge for us. And there's some great opportunities that are lying here. So a couple announcements. Excited for San Fran. Connect with you guys out there. It's going to be a great event. We are going to be running it back DC. So DC would be a 2-day event as well in April. So you put your calendars down for April 23rd to 24th. More details will be announced over the next couple of weeks. So just want to put that on your radar again. So it is 8 o'clock here. So I'll let you guys go for tonight. I appreciate you guys coming on, and we will get back to it tomorrow. We do have NVIDIA's earnings, so all eyes will be on them. NVIDIA's earnings will come out tomorrow after hours. So we'll see what that does for the market. The SPY and the QQQ, same spot. So there's not any really updates on any companies or anything. We're all in the same spot. So I appreciate y'all. Thank you guys. You guys have a blessed evening. Take care.